Okay, good morning, folks, and welcome to Stock Charts Today. This is where we review the pre-market activity in the U.S. markets and, when necessary, the foreign markets. And then we're going to segue into member stock chart requests, which is where we review the symbols that our members submit for me to review on video. Let's begin first where I left off with members last night. We spent a lot of time last night on Market Wrap. Members, if you're watching this, you haven't watched it, please go to the members area. Check it out, where we discussed our plan to short this market if bond yields and if the dollar continue higher, because we are at the precipice of rolling over. And as you can see by this 4-hour chart of the S&P 500, yesterday we broke down below the lower band of support, which formed after we had this double bottom setup, which was created after the sell-off earlier in the month. Here's a higher level view, and we're threatening to put in a higher low. We're up in the pre-market. At current, it is 4:50 in the a.m. Eastern Standard Time. The Nasdaq 100, same deal here, potential lower high. We broke down yesterday below the lower band of support on this 4-hour chart. We are up in the pre-market. Remember, we have the GDP number for Q4 2017 coming out this morning. Now, I mentioned earlier I was concerned about the U.S. dollar. Here's a 4-hour chart. Sorry about the messiness of all these lines here. I got to clean it up. But you could see that we are poised to take out the highs last seen back on the 9th of February. Now, I will say this. We are seeing some topping action here. But by and large, we are very, very close to a breakout point. I mentioned to members on Monday that while the dollar was down on the day, I was still very concerned that the dollar might rally, which would impact our commodity positions. And sure enough, yesterday, the markets chose to ignore all the negative economic data and chose to follow who I'm going to call the Pied Piper, being Fed Chair Powell, listening to his optimistic forecast on the U.S. economy and the fact he's going to raise rate, despite the fact that while he was speaking, the Atlanta Federal Reserve took their Q1 GDP number, their estimate for 2018, down from 5.4 only 2 weeks ago, 5.4% GDP growth, down to 2.6% in 2 weeks. Yet the markets shrugged off the economic data and they shrugged off the Atlanta Federal Reserve's estimate. Go figure. You can't fight these guys. But we do have a strategy. If they decide they're going to take this market lower, it's simple. All we'll do is look to open up short positions. Our strategy is already under development. There will be a lot of money made here. I don't care whether or not it's the upside or the downside. You just need to make sure your timing is appropriate. Gold, surprisingly strong this morning, has been gaining strength these past few minutes. We're up $3.20 after a brutal day yesterday. We're still well above 1,300. Now, what we're hoping for here is a miss on the GDP number coming out this morning. If we get a big miss on that number, you can bet that you're going to hear the markets call BS on Jay Powell's testimony yesterday. Now, the dollar is up and gold is up. One of these two are going to win out because they will not trade in tandem for much longer. Bitcoin. The last time I spoke about Bitcoin, I believe it was on Monday, and it was under pressure. And I said, while I wasn't necessarily bullish on the name, the orderly pullback after some negative news came out of Coinbase with regard to IRS reportability of some of their customers, I said the pullback was fairly orderly, and I wouldn't go shorting Bitcoin through the futures market, and I wouldn't be a bit surprised to see a rally back. Sure enough, only literally a couple hours later, Bitcoin launched. It really moved up significantly, and we are trading above this upper band of resistance, which should now act as support. We are poised to take out the highs of earlier in the month. At current, we're seeing a little bit of weakness. We're down about $95. This is a 4-hour chart, so we could rally back here. But Bitcoin is showing some fairly good relative strength. Members, let's segue into your member stock chart request. Okay, as we go into these symbols, I want to preface what I'm about to say by saying this. I am extremely concerned about this market. I think that the Federal Reserve is playing with fire. If GDP numbers come out at or stronger than expected, you will see yields rip higher. You'll see the dollar rip higher, and you'll see this market sell off. Why? It's because it's already shown it cannot withstand the levels at which we have been at in terms of yield in February. So how much more is it going to be able to take? I'm not quite sure. But they've been sending us signals vis-a-vis a 10% sell-off earlier in the month, and the fact that we have reversed on the week thus far. Now, getting to our first chart, which is MTUM, this is the Momentum Factor ETF. We have not taken out the highs of earlier in the month. In fact, we are quite possibly putting in a lower high. We are off the highs of the week. I would not be a buyer of these shares. They are losing momentum. Daily chart. Yesterday, we flashed a bearish engulfing of the prior day's move. Not good. We are retesting the lower band of this support level. If it breaks, we're going lower. In all probability, we will retest the 100.20 level. We'll revisit at that point in time. We're putting in lower highs on RSI. Volume yesterday, significant. Lower highs on Ultimate Oscillator. I would avoid until we got a breakout above this upper band of resistance. Next chart up, Nvidia. Now, Nvidia, which is obviously a stellar stock, right? It managed to take out the February highs, and we are trading just off of them now. Would I buy the shares? No way. Why? We are just shy of resistance at 251.81. Volume on a weekly basis. And granted, yes, we have a few days left to go this week. But you could see that last week volume dropped off dramatically. I'm expecting volume to continue to drop off this week. Daily chart. You can see here we did manage to take out the prior high of 249.12. We put in a new high of 251.81. We have broken down below the lower band of support on this uptrend channel. We are now threatening to move lower. We did break out on RSI. So while I wouldn't short Nvidia, I wouldn't buy it. Take note of the divergence on Ultimate Oscillator. Volume, horrible volume. I would not buy these shares until we took out new highs on volume. CRE, weekly chart. I think all I'm going over here is a weekly chart. Yeah. Daily chart, too noisy. Weekly chart, it's very simple here. CRE has bounced back, obviously. When would I buy it? On a close above 40.24. We have put in a nice sound base here. And I wouldn't short CRE. You're too close to a sound base. I mean, really, what's your risk-reward profit potential here to the short side? I would view it as a long candidate and wait for a breakout above resistance, which is at $40.24. If we close above that level, we're going up to 44.52, then 53.33. Alibaba, weekly chart. We're putting in lower highs on RSI, lower high on Stokes, lower high on price. Stoke RSI is an absolute disaster. I drew this annotation a couple of weeks ago, and nothing's changed. It's very, very weak. When would I buy it? On a close up and above $206.02, daily chart. We attempted a breakout on Monday. That breakout failed. We're probably coming down to 185. My guess is that we break it. Volume rose yesterday. I would avoid these shares until we got a rally up and through 195.15. I would open up a position there, then look to add on a rally up and through 206.20. That's it for this morning, folks. Keep an eye on the economic data. Members, more to come later on this evening on Market Wrap, where we will update our strategy of trading this market. Everybody have a profitable trading day. Be well.